Investors not happy with Chipotle today. Another cut in the forecast. One of the problems the company says economic weakness, keeping customers out, people looking for cheaper stuff. Of course, Chipotle touts its freshness and quality. Our guest says that this is a reset year for the company, but he does say international expansion looks like a key driver over the long term. We're joined by Jacob Aiken-Phillips, VP of Consumer and Retail Research at Melius Research. Thank you very much indeed for joining us.
Hi, Andrew. Thanks for having me.
Just summarize the problem at Chipotle right now. Why is growth disappointing?
Yeah, so I mean, it's mainly been driven by traffic. The quarter came in comps and traffic a lot worse than expected. Traffic was down 5%. And I think that they're trying to do a lot of things on throughput initiatives, on marketing, on their digital, but it just didn't transpire this quarter as people had expected it to. And now it goes towards, can they get back to that mid-single digit comp that's been supporting their valuation?
So are they something of a premium fast food operator? I mean, are they a little bit more expensive than a standard burger chain from the consumer's point of view?
I mean, okay, so I wouldn't call them fast food. They're fast casual, pioneers in the fast casual, but definitely a premium multiple that they've had. It's like 45, 50x next 12-month average over the last 5, 10 years, whatever you want to look at it. And that's been driven by brand relevance, unit growth, and their ability to continuously drive traffic. Now that traffic seems to be a little weaker than people have expected, and some of it can be attributed to the macro, but now that that's showing some weakness, the valuation's in question. Will it revert down to where peers are, or could it go back up to that 50x range?
That's interesting. So it still trades at a premium, reflecting the growth that they have achieved.
Yeah, well, and it's about, they're only maybe about halfway to their total penetration in the US, something like that. There's still a lot of runway for growth. They have good unit economics on their stores, but if the stores aren't growing traffic, then they become less efficient and they lose volume, et cetera. That pressures margin, and it could hurt the growth story longer term. That's why a lot of the questions on the call were focused around getting back to that mid-single digit comp, or maybe if it should be reframed as a low single digit comp, which they did not agree with.
Sorry, what was that last thing? The single digit comp that they didn't agree with? Sorry.
Yeah, so people are kind of asking or postulating whether maybe the long-term algorithm is more of a low single-digit comp instead of a mid-single-digit comp. And management does not agree with that, was my point. That's just what people have postulated.
Maybe we can put up a 5-year chart for this stock, because, wow, it was a high flyer right through June of 2004. It got up, it flew, and it really has had a fall from grace since.
Yeah, I mean...
2024, I'm sorry. Go ahead. Sorry, go ahead, please.
Yeah, of course. I mean, I feel like that could be said for a lot of stocks across the restaurant space, but Chipotle does have a long history of not only compounding their store base, compounding EPS, but compounding their stock price. Mm-hmm. And right now, the pullback, I think, reflects concerns about that longer-term trajectory in terms of traffic. And I mean, the key question is if they can get back there, and if they can, and we think that there's a possibility if they lean into their digital offering, if they're able to, then maybe they can reclaim that valuation.
When you say digital, you mean people ordering in advance over an app and stuff like that?
Yeah, so more broadly, like the rewards loyalty system, digital multi-channel offerings, stuff like that. They talked a lot about on the call how they're better able to segment their customer base, and if people are starting to do a little lower frequency, maybe that you can entice them to start coming back. Mm-hmm. Or if you're getting new people that only just tried it, there's different pathways you can take from a rewards and loyalty perspective.
And what is your rating on Chipotle right now, Jacob?
Right now, we're at a hold. Mm-hmm. We viewed the stock as appropriately valued when we initiated, mm-hmm. Just given it was like in the 40s range. Mm-hmm. But people are definitely going to start sniffing around now that it's contracted like 10%.
You have some other ideas. You say possibly QSR, Restaurant Brands, parent of Tim Hortons and Burger King. The people with multi-brands could be a better idea at this stage.
Yeah, I think it just, well, so the multi-brand gives you more levers for growth. You can lean into different aspects, especially in a franchise model of QSR, where they have franchisees that are supporting multiple of their brands. So let's say in their region, they like max out on the Tim Hortons, really popular brand, as I'm sure you're aware. They can move to Burger King or move to the other platforms and then grow out in that region. So it's good for the franchisees, but also good for the master franchisor or QSR in this case.
Tim Hortons always seems to have a lineup, and I like it because they have brewed tea, steep tea ready, but I'm weird that way. You have another couple of ideas we don't talk much about. Texas Roadhouse. What is special about them in the fast casual space?
Yeah, so I think that like the general theme on my launch and across my entire coverage has been that prices have increased a lot over the last few years, and valuation, not valuation, but the value perception from the consumers has gotten distorted. And Texas Roadhouse is one of those companies that has very steadily, they only price for what they deem structural inflation, like wage growth. They're not going to take pricing because beef prices are up. They're not going to take pricing for things that they think will even out over the longer term. And that model, plus a steady 25, 30 stores a year, just will compound EPS over the very, very long term. And we think that that's underappreciated.
And then Dutch Brothers are a coffee chain. And what is their selling proposition? Why do you think they're an interesting stock?
Yeah, I mean, I definitely don't think that that's an out of consensus view. A lot of people like it. They're another fast unit grower. They're at a very early stage in their unit growth story. They're like mainly concentrated on the West Coast and have been expanding out across the country. Almost you could compare it to Chipotle and like the expanding eastward from like Western roots. And they just have a really cool concept that goes at a younger population. It's customizable. They have energy drinks, coffee. They're rolling out the food platform, which will benefit comps. And as long as they're able to sustain traffic, just like the debate with Chipotle, sustain traffic, keep growing units, the stock can work over the long term.